What do you think will happen to Tesla stock by the end of the decade? Even experts and analysts have varying opinions, with some pretty optimistic while others are becoming more and more bearish. Still, there are those who are pretty confident that Tesla stock will explode by 2030. You surely would not want to miss this. Even today, with Tesla stock trading at around $133 per share, many still say that the stock's overvalued. This has been one of the longest-standing arguments between experts and analysts alike. In light of this, although some view Tesla to be expensive now, in the long-term view, the stock could have plenty of room to run. In fact, experts believe that Tesla stock could double by 2030. An expert thinks Tesla stock could gain at least 170% by 2030 because of the vehicle business alone. That said, a majority of Tesla analysts think you should buy its stock, with many believing the price can rise above $1,000. Of course, there is a wide disparity in expert opinions, with the average price prediction around $800. In mid-November, billionaire investor Ron Barron, a known Tesla bull, shared his thoughts that Tesla stock could soar nearly 650% by 2030 to a $4.5 trillion valuation, solely based on the notion that Tesla can significantly scale to 20 million cars per year. To this, Barron excluded batteries, autonomous vehicles, robots, and the like from his bullish forecast. It's no wonder he sees such a meteoric rise in Tesla's stock, with the stake worth nearly $4 billion, or a cost basis of around $13. He would stand to make over $25 billion. However, the $20 million annual EV target is fundamentally flawed in that it not only assumes a near monopoly or a void of competition in the burgeoning EV industry, but also unrealistic expectations related to global EV volumes and market share. At the time, Barron laid out his vision for Tesla's sky-high returns. He said that if Musk does 20 million cars by 2030 and they're $50,000 a car, that would be $1 trillion in revenues. And he's getting operating profits at somewhere around 30%, adding that a 15x multiple on those $300 billion in operating profits gets you to $4.5 trillion. Barron further explained, "The math adds up, and his average vehicle price is reasonable compared to the current levels, as Tesla recorded an ASP of around $54,364 during Q3, as lower-priced Chinese vehicle volumes rose during the quarter to 120,576 vehicles. Operating margins were just under 20% in Q1, before dipping back below 15% in Q2. So Tesla would still have to improve its operating leverage as it scales for Barron's math to equal out. The assumption also fails to account for any mass-market sub-$25,000 vehicle entry, which would in theory have higher volumes and lower margins. However, the 20 million vehicle target, which underscores this assumption, includes multiple key flaws that challenge Tesla's ability to reach such a target by 2030. The fundamental challenges to Tesla's 20 million EV target by 2030 include global vehicle volumes assuming astronomical market share, increasing competition and costly parity mass market, and factories needed to support such capacity. Overall, for Tesla to reach a volume of 20 million vehicles per year, it would need almost a hand-over-fist monopoly in EVs or a market devoid of competition, and a more than six-fold increase in factories and capacity. In mid-December, Barron said he believes Tesla can hit $500 to $600 per share by the year 2025, and the company could be worth $4.5 trillion in the next 8 to 10 years. But that's not including robots, that's not including autonomous vehicles, that's not including batteries, Barron said. Barron's stake in Tesla is worth around $4 billion across several funds for Barron Capital as of December 2022. Barron's cost basis is as low as $13 in several of the funds. I think in 2025 it will be $500 to $600, and in 8 to 10 years we ought to be somewhere around $4.5 trillion, Barron said, referring to Tesla stock. A market capitalization of $4.5 trillion would make Tesla more valuable than Apple and Saudi Aramco combined, as Musk claimed in an earnings call last year. Barron estimates that Tesla will sell around 20 million cars per year in the future, compared to the approximately 1 million the EV maker is expected to sell in 2022. In 2030, if he does 20 million cars per year and they're $50,000 a car, that's $1 trillion in revenue. And he gets operating profits at somewhere around 30%, Barron said, referring to Tesla and its CEO Elon Musk. A multiple of 15x operating profits of $300 billion gets Barron to a price target worth a market capitalization of $4.5 trillion. That said, investors could benefit along the way if Barron is right about his price predictions. A $1,000 investment in Tesla stock today could buy 7.5 shares, based on a price of $133.42 at the time of speaking. Hitting a price target of $500 would make the investment worth $2,980 in 2025. Hitting a price target of $600 in 2025 would make the investment worth $3,576. To hit a market capitalization of $4.5 trillion, shares could be worth significantly more in the next 8 to 10 years. Taking $4.5 trillion divided by a current market capitalization of $565 billion for Tesla creates a multiple for shares. The $1,000 investment in Tesla today would be worth $8,487.34 in 2030 if Barron's price target is reached. This represents a gain of 748.7% over the next 8 to 10 years. This represents average annual gains of 74.9 to 93.6% depending on when Barron's target is reached over the course of the next 8 to 10 years. While all this is hypothetical, Barron has been one of the biggest believers in Tesla and is holding on to his shares despite massive profits and placing another bet for the long haul, which could tempt more investors to join him. Notably, Tesla stock has accumulated gains of 8,535% in the past 10 years, compared to 348.9% and 187.6% returns produced by the NASDAQ 100 and the S&P 500 index, respectively, during that same period. This means that the company's share value has grown at a compounded annual growth rate of 56.8%, an impressive return that hasn't necessarily come without hiccups along the way. Tesla hit all-time highs post-splits in November 2021 at $414.50 a share, but changes in the macroeconomic backdrop led to a significant decline in its stock value after that, as investors adopted a risk-off attitude due to the U.S. Federal Reserve's increasingly hawkish actions. For this reason, investors must be aware that past results are not a guarantee of future performance, which means they could not base their Tesla stock price predictions on what its price has done in the past. During the first 9 months of 2022, Tesla produced total revenues of $57.1 billion, $50.2 billion of which came from the sale of its vehicles. During this same period, Tesla produced a total of 929,910 vehicles and delivered 908,573 units. It is no secret that 2022 has been a rough year for Tesla, with Tesla stock hitting record lows several times in the past year. Several headwinds, including the U.S. Federal Reserve's multiple interest rate hikes, China's strict zero-COVID policy, and CEO Elon Musk's full-time involvement with Twitter, have contributed to the decline. While Tesla has enjoyed a first-mover advantage in the EV space, legacy automakers are quickly pushing forward with massive EV overhauls. OEM investments in EVs are rising significantly. Toyota has said it is prepared to invest 8 billion yen, around $60 billion in EVs by 2030, while Hyundai is prepared to invest 87 billion for EV development, most recently announcing an 18 trillion yuan, $12.6 billion push for software and EV platform development by 2025. GM is not only targeting at least 1 million EV sales by 2025 with a $35 billion investment in EVs and AVs, but is also expecting EV sales to be profitable by then. Volkswagen is targeting EV volumes of up to 3 million across its brands by 2025, while Volvo is aiming for 1 million. Alone, these three could account for 4 to 5 million EV sales in 2025, potentially accounting for around 25% market share. This does not account for Chinese OEMs, which include PHEVs and targets. BYD could sell around 4 million EVs by 2023 and 6 million by 2025. Great Wall is aiming for 3 million EVs by 2025, and SAIC, which is aiming for 2 million. Simply put, if existing OEMs end up with a nearly two-thirds share in the EV market based on targeted volumes, Tesla could find challenges scaling to 20 million vehicles by 2030, as predicted. A 20 million vehicle target from Tesla assumes that most major OEMs fall far short of their EV plans in a mid-30 million vehicle market, or that the EV market somehow grows to over 50 to 60 million units by 2030. Tesla would need a significant expansion from its current factory footprint and capacity in order to reach 20 million vehicles by 2030. Once Berlin and Texas come up to maximum scale by 2024, and with factories for the Roadster and other future models, Tesla can support about 4 million vehicles. In order to reach 20 million vehicles, Tesla would need around 15 more factories, with the start of construction to maximum capacity timelines ranging from 6 months to 2 years. Tesla would have to build about 3 factories per year between 2023 and 2028, at a likely cost of $8 to $10 billion each year. Tesla's required growth rate corroborates the need for a significant boost in its factory footprint. Even if future factories mimic Berlin's max capacity of about 2 million vehicles, Tesla will still need at least 7 more. And Musk shared last year how Tesla plans to build more gigafactories. If this indeed happens, it will significantly ramp up production. Although Tesla is experiencing several headwinds today, in the long term, the EV maker still looks to have a bright future, and investors might be kicking themselves down the road for not buying shares of Tesla now at its current price. Subscribe to Tesla stock for more.